Tom Lee, Wall Street expert, he's been caught on numerous occasions saying that Bitcoin is going to reach $250,000 this year, meaning roughly a $5 trillion market cap for Bitcoin and therefore a 10 trillion total crypto market cap, which is absolutely insane to think. We are currently sitting at around a $4 trillion total crypto market cap, meaning therefore we have a 2.5x in store, $6 trillion more of institutional capital about to come into crypto. But maybe it will be a little bit more. Tom Lee recently confirmed in this CNBC interview just yesterday that there is $7 trillion worth of institutional capital sitting on the sidelines, despite the fact that all markets are at all-time highs, doing very, very well. And better still, indicating that they will continue rallying in the coming days, weeks, months and years to follow TradFi. Institutions are waiting for a bit more clarity, waiting for the Fed to start cutting rates. That will definitely resume soon and send the capital from the risk off or from Bitcoin into the risk on, into the altcoins, into the XRPs, sending us so much higher. Listen closely here to Tom Lee on CNBC.
There's $7 trillion of cash on the sidelines, and retail investor sentiment, I think you have to really fracture it. I think the Robinhood community is bullish, but what I'd call the high net worth and the traditional equity investor is still pretty cautious. That's the heart of our universe of clients. I don't find a lot of people cheering and happy. Most of our institutional clients are skeptical of this recovery because they feel that there's still looming uncertainties, whether it's the FOMC or the tariff deadlines. There's a speculative bubble that inflation is coming back, and there's a speculative bubble that we are on the precipice of a recession, because that is probably the most common conversation I have with clients. And every Zoom I've done with an institutional account, always 5 minutes in, someone's like, Tom, how come you're ignoring all the risks out there? Don't you realize we could already be in a recession? So I think there is speculative excess in the fact that we're in a recession.
And negativity.
Yes, just like there was a bubble of pessimism after GFC. Remember, from 2009 all the way through 2019, it was a bubble that another financial crisis was coming. It was a bubble of pessimism.
Tom. I mean, that was just not a regular occurrence.
Correct. That's right. And the market today has PTSD of trade and the Fed. The Fed is on hold, but the Fed will resume cutting once they're confident inflation is not a problem with the tariffs. Now, I don't know the date that starts, but if the Fed becomes dovish, that's more central bank liquidity. That should benefit the financials. It benefits small caps, which are highly correlated to that trade, the regional banks, but it also benefits the cryptocurrency complex because that is highly sensitive to central bank liquidity. So I think the banks and the financials and small caps and the cryptos kind of move when the Fed becomes dovish.
Why do you mean? The financials are already trading at a high. That doesn't work. They're already at a high. They're already moving. Then why aren't small caps moving with them now?
Well, the financials have recovered, but they still haven't become expensive. And that's because there's another lever that gets pulled. When you cut rates, then mortgages become affordable, and it actually expands the credit cycle. And keep in mind, the ISM has been below 50 for 29 months. That's the longest stretch in the ISM's history. So I think we actually, to Chris's point, if the Fed starts cutting, I actually think we have a cyclical recovery that is good for cyclical stocks.
Now, to be fair,
so we have a shortage of housing that's worsened because interest rates are high, that is actually causing home prices to stay elevated. So I think there's a policy problem. And the other thing to ask is, if inflation's at 1.8 and core PCE is at 2 and the Fed's at 4.5, it's very difficult for the Fed to explain why they are keeping real interest rates high, which really hurts consumers. So I think there's other policy measures that can be done to slow the economy, including the fact that there's all these tariffs in terms of taxes for businesses. So if someone told me there's $400 billion taxes going on to the economy and said the Fed has to stay tight, it's counterintuitive to me.
So once again, it is the rate cuts that we are waiting for, and more questions are being asked by more and more people with no answers, or with no logical answers being provided. The Fed stated a few months back that they want inflation at 2% before continuing their rate cuts. We have now been at that target and below that target for quite some time now. Yet Jerome Powell still quotes tariff concerns as his reason for stalling. As Tom Lee stated, it is counterintuitive. It is this behavior from the Fed that is raising so much uncertainty, causing so much FUD in the market from institutions, from consumers, who, once again, they are ready to ape in and add $7 trillion worth of capital into this market, flowing into crypto, flowing into XRP. And it will flow predominantly into XRP. Fiona Murray, Ripple's managing director of APAC's region, confirmed in this interview on global payments and real-world adoption that their focus right now is on the XRP ledger, on utility on the XRP ledger. So getting the infrastructure ready for this mass wave of adoption that Tom Lee was hinting at earlier. And once again, once this happens, the price will follow. XRP will explode in value, going so much higher and outperform Bitcoin and the rest of the crypto market. Listen closely here to Fiona Murray in this interview.
XRP has been experiencing a lot of price movements so far, reaching very high, above $3 in early 2025, before the correction. And how do you balance the excitement of the token itself and, the price appreciation, and also between that and, on the utility and balance that between that and the utility and the long-term adoption?
Yeah, that's a question that we get asked about a lot, but it's one that I have to say internally doesn't get much focus, and that's because number one for us is utility. So the market for crypto is very unstable, and often we're surprised by which way the market moves or some of the volatility, because we don't have an answer or a reason behind it. So what we do as an organization is we have some personal interest in watching this space and tracking the price of XRP, of Bitcoin, of Ethereum. However, what we do as an organization is really focus on what are the use cases of building on the XRP ledger. What are the use cases of using digital assets like XRP, like RLUSD in payment infrastructure? What are the capabilities or the transformation that can come when you adopt digital assets? And that means that we're pretty arm's length from any of the movement or volatility in the crypto world, because we're laser focused on utility for the institutions that we work with.
XRP is currently valued at $3.17.55, up roughly 0.29% on the daily time frame, and it's finding support at its previous all-time high zone around here, just chopping sideways for the time being, as traders wait for a definitive catalyst that will turn the scales and move the price, whether it be up or down. Time will tell. Tariff announcements will be resuming on Friday. That may be the catalyst to send it up or down. Also, the next FOMC meeting happening this week as well, and the PCE inflation data. There are many indicators, many catalysts to look out for coming through this week. That's the short term. The mid to long term, though, throughout the rest of this crypto cycle, the increasing utility and adoption of the XRP ledger of RLUSD, this will increase the demand and price of XRP. $7 trillion for the capital is sitting on the sidelines, ready to flow into Bitcoin, being the safest store of value risk off crypto asset, but that will trickle into the real utility assets following rate cuts, and then institutional adoption, then the passing of the Clarity Act as well in September, and we'll see assets like XRP as a result soar so much higher. We are, by all means, still extremely early, so to learn much more, to benefit from the other incoming opportunities, and look no further than the VIP. WAP.com/coinfactory. From alpha institutional research documents, learn what smart money is saying to their clients, allowing us to get ahead of the retail market, educational videos, trade alerts, private live every single week, and so much more. Check it all out. 7-day free trial, link down below in the description. And as always, remember, don't look short term, do your own research, think long term, and I'll see you in the next one.